If you're buying or selling in Tampa Bay right now, you need to hear this. Homes are taking 17 days longer to sell than they did last year. Buyers are negotiating 4% discounts and mortgage rates just hit 6.3%, which is the lowest that we've seen since October of 2024. Now, the market is shifting, no doubt, and if you don't understand these numbers, you're gonna make the wrong move. I'm Randy Ahmad, and in this video, I'm gonna break down the 6 critical stats from August that's shaping our market. Plus, what I predict is gonna happen, what we're gonna see in terms of September numbers. By the end of this video, you're gonna know exactly what's happening with sales activity, how long homes are sitting on the market, inventory levels, how that's performing, what's going on with mortgage rates, and what kind of negotiations are actually happening out there, and what we can expect to see when the September numbers come out. So stick around. Okay, so let's start with how many homes sold in August. We saw 4,423 homes change hands last month. Compare that to July of this year, we were down around 3%. But if you compare that to August of 2024, the numbers are actually a lot more harsh, 10.5% less than last year. To be exact, 523 homes versus August of last year. So what does this mean? Well, for buyers, this is a clear sign that demand is cooling off, obviously. Fewer sales means less competition, which gives you, the buyer, more negotiating power. For sellers, it means you have got to be smart with your pricing from the very, very beginning. Fewer buyers are pulling the trigger today, so you honestly can't afford to overprice your home or even try to play games with the market. So strategic pricing is very important from day one, more important than ever. What's interesting is that investors are actually buying up nationally, right? Investors are buying up 33% of all single family homes, up from 25.5% last year. So volume is down, which means investors are going to face less competition from traditional home buyers. Okay, so lower sales volume often signals a shift towards a buyer's market, which could mean better deals for you as an investor. So we know how many homes we sold. How long does it take it to sell those homes? Now, this is going to be one of the most important KPIs, important metrics that we want to look over, and it's something that buyers and sellers need to pay attention to. The average time it took for a home to sell in August was 75 days. Now, let's take a look at the trends. It took about 5 days longer to sell a home compared to in July of this year, and a significant 17 days longer than it did last August. So if you compare August of this year to August of last year, it took 17 more days to sell a home. So definitely a shift from the fast-paced sellers market that we've seen in previous years, and we're heading more into a balanced market, so to speak. So for sellers, this is critical because if your home isn't priced right from the very beginning, it's going to sit. And the longer it sits, the more leverage buyers have to negotiate you down, okay? Now in this market, you need to price competitively from the start again. Like I said earlier, price it right from the start so that you're able to attract those motivated buyers who are ready to move and ready to buy right now. For buyers, this is good news. More days on market means you have more time to evaluate properties. You're not being rushed into decisions, and you certainly have more negotiating power, especially on homes that have been sitting on the market for 60, 90, or even 120 days. Okay, so on the subject of a balanced market, let's talk about how many homes are actually available right now. The number of homes for sale is a huge factor in any real estate market. And in August, we had 20,353 active listings. That's a great sign for buyers because it means more options are available. We're seeing more homes on the market compared to August of last year, with inventory up by 6%. However, we did see a slight dip from July of this year with a decrease of about 6.3%. So let's just put this into perspective using months of inventory. This is a key term, and it just means that if no new homes were to hit the market as of today, it would take around 4.77 months to sell all current homes. Okay, so we're getting closer to a balanced market, which is typically considered to be about 5 to 6 months of inventory. So we're at 4.77. We're not that far away from 5 or even 6. So here's why this number matters. Anything under 5 months is generally considered a seller's market. 5 to 6 months is balanced. Anything over 6 months tips into a buyer's market territory, and we're right on that edge. For sellers, this means competition is real. There are nearly 20,400 other homes competing for buyer attention. So you can't just list your home and expect it to sell itself. You need to stand out with the right price, right presentation, right marketing strategy. All of that needs to have a role in getting top dollar for your home. Now, for buyers, this is your opportunity. More inventory means more options, more negotiating leverage, and less pressure to settle for something that's not quite right. Okay, so with all these shifts in supply and demand, what does this mean for prices? Here's the data that everyone wants to know. The average sales price in August was 486,745. So generally speaking, prices are up a modest quarter percentage point compared to last year. But what's even better is that month over month, we had a healthy 2.95% up from July. Now this is normal. So it's not like we're heading over and prices are increasing. No, prices are stabilizing. We're not seeing wild appreciation that we saw a few years ago, but definitely we're not seeing a crash, which is good news. This is a healthy, sustainable pace of growth that we want to see. So for sellers, if you've been sitting on the fence thinking about selling, now might be your window of opportunity. Prices are holding steady, but with inventory rising and sales slowing down, there's no guarantee that this is going to continue. Now, if you price it strategically, you can capitalize on current values. Now, on the flip side, for buyers, this is a relief because we're not seeing runway prices anymore. Prices are predictable somewhat, which means that you can plan your purchase with confidence. And if you find a home that's been sitting for a while, again, like I said earlier, there is room to negotiate below that average. Okay, so a lot of news lately on mortgage rates. What's happening there? Not sure if you heard the news, but as of late September, we're seeing 30-year fixed mortgage rates at 6.3%. Now that's down from the 7% range that we've been dealing with earlier in the year, and certainly the lowest that we've seen since last October. So why are rates coming down? Well, the Federal Reserve cut short-term rates by a quarter point in September, responding to a cooler job market and trying to ease inflation. So that translates ultimately into lower mortgage rates because the Fed does not have control of long-term rates. They have control over the short-term rates. So here's the reality. Rates are still more than double what they were during the pandemic. In 2021, that sort of thing, where we've seen 3% and that sort of thing. But historically speaking, 6.3 is actually reasonable. So if you look at the mortgage rate history going back to 1971, the average is around 7.7. So while it feels high right now compared to a few years ago, we're actually below the long-term average. So what does this mean for you as a buyer? This means that this could be your window of opportunity. Rates have come down, and experts are predicting that they'll end the year around 6.4 and potentially drop to the fives by the end of 26. Now, I don't know how realistic that is because nobody knows. I mean, between now and 2026, you're talking a very, very long time. Anything can happen. So waiting for rates to drop below 5%, honestly, I don't know how realistic that's going to be. So if you're ready to buy now, I suggest, don't wait for the perfect rate. Buy when it makes sense for your situation and then refinance later if rates were to drop further. Okay, sellers, lower rates generally means more buyers can afford your home. So that definitely will expand on the buyer pool, which is good news. But it also means that you're going to be competing with more listings as other sellers try to take advantage of the same situation. Okay, so let's talk about what's happening at the negotiating table between buyers and sellers. Another important stat for both buyers and sellers is the list to sales price ratio, which is essentially the average discount that homes are selling for off of their original list price. So in August, homes sold for 96% of their list price, which means that the average discount was around 4%. Now, this is just 1% lower than last August, which tells us that buyers are getting a bit more negotiating room. Now, this is a direct result of everything that we've talked about previously. So slower sales, more days on market, rising inventory, all of that adds up to one thing, is that buyers have leverage. So sellers, again, this is why it's very, very critical, very, very important that you price your home correctly from the get-go, from the very beginning. If you overprice hoping to negotiate down, you're just going to sit on the market and end up taking an even bigger hit later down the road. So price it competitively from the very beginning, and you'll attract serious buyers who are ready to close right now. So here's my prediction for September. Historically speaking, September sales drop from the previous month. Last year, we went from 4,781 sales down to 3,560, which is a 25% drop. The year before that, sales dropped about 16%. So given that we're already in a cooling market with 4,423 sales in August, I'm predicting that we're going to see somewhere between 3,700 and 3,900 sales in September, a about 12 to 16% drop, right in line with seasonal patterns. So what about prices? Well, when sales volumes drop in September, we typically see prices soften as well. Okay, so last year the average sales price dropped from 485 in August to 475 in September, which is about a 2% dip. So given our current market conditions, I'm expecting that the average sales price to relatively stay stable, potentially dropping to around 475 to 480. And again, that's holding, seasonal adjustments, and I don't suspect that we're going to see a crash anytime soon. So what does this mean for you? If you're a seller and your home didn't sell in August, September may be a rough month. Buyer activity slows, especially as we're heading into the fall and holiday seasons. So you need to be very aggressive with pricing and marketing right now. Now, if you're a buyer, September could be the sweet spot for you. Fewer competing buyers, more motivated sellers, and homes that have been sitting through the summer. And that all equates to more negotiating power in your side. All right, so what does this all mean for you? So the market is showing a clear sign of change, a shift. It is getting a little slower, which gives buyers more options and more time to negotiate. For sellers, this means that smart pricing and strategy are more important than ever. The Tampa Bay market in August showed us a market that's cooling somewhat, but definitely not crashing. Sales are down, homes are taking longer to sell, inventory is rising, prices are stable, mortgage rates are improving, so buyers are getting discounts, and September is likely to continue this cooling trend. So this is a transitional market, no hysteria. We're moving from a seller's market towards something that is more balanced, and that's a good thing for all parties. And how you respond to that depends on whether you're buying, selling, or investing. Now, whether you're looking to buy, sell, or invest, you need a plan that's going to be specific to your goals in this unique market. And every one of these stats that I've gone over will help shape your strategy. So the question is, are you positioned to make the smartest move based on what's actually happening right now? If you're ready to buy, sell, or invest here in the Tampa Bay market, please give me a call. I'll give you a personalized breakdown of what's happening specifically in your in your neck of the woods, in your specific neighborhood, and a price range that you're comfortable with, so that you can make the right decision at the right time that's right for you. So don't wait. Let's make sure that you're on the winning side of this market shift. And I'll talk to you soon.